All right, let's get right into it here. Hope you guys had a good day trading today. On the 29th of January, we have what is it? We have a couple more days here before. Yeah, got 2 more days for the end of the month trading here. Like 2 more sessions before the January. So as of today, Monday here, and this market bottomed in November, really October 31st here, to be exact, at 410. So it's been 3 straight months. 3 straight months this market has gone vertically. We are continuing with this melt up. And every indicators, every oscillators, every overbought sentiment, it goes out the window because the market continues to thrive and advance to the upside. And this is where the bears are going to have a really difficult time in this market. At the same time, also the people who are on the sideline, right? People after we had a 3-month decline here, and some of those people who are forced to get out or panic sold their shares or their longs or whatever it may be, the market just went straight up. So now everybody been waiting for a pullback, right? If they want to get back in, right? Think about it. If you got out here, let's just say you got out near the lows, right here, very unlucky person. You went long around 450, 460 or something like that towards the end of the summer, and then you told yourself, you know what? I'm a long-term investor, so I'm gonna hold through. But it's been very painful for you because every time it looked like it's gonna reverse back up, it doesn't, right? It comes back down. It's like, finally, we're gonna reverse back up at 425 or so, right on the long-term moving average, but it doesn't. It comes right back down again. So you see the lower highs and lower lows. So when you see, and again, this was a 3-month span of a downtrend, right? And also this downturn right here, that 3-month downturn, 3-month downtrend we've seen September, August, September, October last year. It was sort of like a mini 2022, early 22 like price action. It really reminded everyone, right, what it was like going through 2022 January, February, March. You guys remember what happened, right? So I think a lot of people got really scared. And also when we did see that initial bounce here in November, people were like, well, it's going to be another lower high, you see. So people are like, I'm not going to buy that. I'm going to wait for a proper pullback. I needed some sort of a bottoming, you know what I'm saying? Some sort of bottoming reversal pattern. I'm not just going to like go long here because maybe a lot of people try that on this up move here and they got burned. So you see, it has conditioned everyone to be extremely scared. I remember the entire internet was freaking out in October and November last year. You guys remember? The entire internet was freaking out. And then we seemingly see pretty strong bounce, but people are like, no, I'm not gonna buy that. No, I'm not gonna get fooled by this. You know, I tried it here in September, I tried it in October, we were met with a lower high, we saw another tankage, you know, and then it doesn't come. It does not come. Where is that low? Where is that pullback? It does not come. For 2 months straight, that micro-term moving average, once it was reclaimed here, right? Once it was reclaimed on the 3rd day of November, like November 3rd or 4th, like that, that micro term is the aqua color there. Once it was reclaimed, that was it. That micro term was never, I mean never, never once. What happened? What happened to my, there you go. My Zoom function was malfunctioning there, but so the micro term, see, micro term was never breached. You can see that's a micro term here, that's a micro term here, micro term here. And finally, what happened was, you can see right there, this is, some of you guys are wondering, what are we looking at? We're looking at Spider here. And when you see D here, that means daily chart. Sometimes I forget to mention, because, you know, sometimes I analyze 65-minute chart, sometimes I analyze daily chart. So if I don't mention it, this is where you see it. Spider, D means daily chart. If you see 65, it means 65 minute. If you see W, it means weekly. If you see M, it's monthly. All right, so it's a daily chart, meaning each candle represents 1 day worth of data right here. That's 1 day. So that micro-term moving average was never breached. Even here on this day, it looked like it potentially was gonna, but we gapped right back up. Continues there right there. We saw another pretty abrupt sell-off there on that day, but it continued higher. And then when we finally lost it, we finally lost the micro-term. And that micro-term, the price stayed below the micro-term for 4 days. And this was starting a new year. You can see that, okay, that's the 29th right here. So this is January 1st. We gapped down right on the January 1st, slightly underneath the micro-term. And this was a big deal because I think I talked about that at the time, because the micro-term has not been breached for 2 straight months. So at least getting below the micro-term, at least for 1 day, that was a big deal. So you can see entire week, we continue lower. However, the short term was right there to capture it right here. That's the short term, green moving average, and that's the short term. And then we saw very quick consolidation right here. So it looks like that was sort of like correcting through time, right? But that was about a month. That was about a month correcting through time, right? We go up, come down, go back up, come down again, short term right there, reclaim the micro term, boom. And we're pushing 491.27, ladies and gentlemen. I want you to really let that sink in here real quick. 491. 4. We're close to 500. Just about a year ago, we're at 350. People are wondering if we're ever gonna get back to above 400 ever. And now we're pushing 490, and we're very close to 500. Ladies and gentlemen, market is now above the all-time high level here. 1, 2, 3, 4, 5, 6, 7, 8 sessions.
Perfect.
And continue to thrive above the micro-term, short-term here. We want to continue to give benefit of the doubt to the buyers as long as we stay above the micro-term, short-term. That's aqua, that's the short-term. So you're going to see some lines here. That's my Fibonacci extension target analysis, measuring the low and then measuring the recent peak here. And I'm using this as an example, right? So basically the market goes up, because the market doesn't go straight up, it's going to have its up and downs. Though we went straight up for 3 straight months, that's rare, but it does happen. But what we're trying to figure out is, you see these waves of move. That's what we call higher lows and higher highs. That's what happens in a primary term uptrend. Market cultivates higher highs and higher lows. Sooner or later, ladies and gentlemen, we will see that higher low, meaning sooner or later, market would have to pull back, but no one knows when. Maybe though, this Fibonacci extension analysis will sort of kind of guide us to possibly, we can sort of ascertain and gauge what that level might be. That's the possible level where we might cultivate that high, and then we need that higher low, right? So that market can continue with this, primary term. Rather, it's a long-term uptrend. We're looking at about a year and a half or so price action here. So going all the way to October 2022 lows, and then you can see here 2023 January peak. So you can see market made a move. We see a pullback. Find support on the fib retracement zone here on the 50% retracement. So 50% retracement means basically from here to here. Market moved this much, market moved to 50%, we bounce, and then market went all the way to 161.8% extension. Do you understand? So that's why I think retracement extension is important, because then you can sort of, because that's how you're gonna know as the market start coming back. We want to figure out where the possibility of that higher low is going to be. So same exact analysis right here. See right there. That's the peak, right? That's the peak. That's a July peak. And I measure it from here. See? And then that's July peak, yes? Why did I measure it from there? Because that was, again, if this was wave 1 pullback, wave 2, right? So that wave 2 started from here. So that's an important pivotal level, right? So then where it comes down to, so that fib, you see that fib area here. See that? You see these numbers? So that's a 50%. Remember, here, we bounce on the 50% in March. That 50%. 50%. Right? The middle, the second level of the fib there. What happened was during October of last year, 2023, that's a 50% right there. Okay? Coinciding with my long-term MA, the blue moving average. We initially bounced up. My midterm was right there, acted as a resistance, came back down to where? The last level of my fib extension. Right, this is actually 61.8% retracement. Don't worry about the numbers, really. But so basically what this is telling us from here, there's a wave 1. We see that pullback, that retracement is telling us it pulled back 61.8%. From this low to this high, this pullback is 61.8% pullback. And that's the last level of my fib, coinciding with my primary term moving average, which is my pink moving average, right? And then it bounced. It bounced. We're just now clearing, as you can see, 138.2% extension. Because last time though, see that's 138.2% right here. You pull back 1, 2, 3, 4, 5 days, about a week. That's a week, right? And then we went to 161.8%. I mean, it's still a possibility because obviously market is not gonna respect this level to the cent, though. It's done that here. It respected the cent. It respected here to cent. This one also sort of did that. But if let's say if there's gonna be like a macho, like, you know, micro short term trap right on that 38.2%, this thing like a gaps down tomorrow. Let's just say we see some sort of shenanigan down gap, some sort of bloodbath just out of nowhere. Let's just say, then that's definitely that little heads up here, that little poking his head. Definitely that's definitely a head fake there and trap right on the 138.2%. Again, before that 138.2%, we did see about a 1 week of decline and retested the short term right there. Which if we do see a decline, then probably likely we'll retest at all-time high, 479 or so, which is short term is in that vicinity. But what I really want to get at is, in the short term, we're gonna have fluctuations and all that stuff. I mean, you could even, you know, consolidate through time, as you can see right here. It could do for a month or several to 3 weeks. Possibly this is where the market is going, which is at 507.91. I think the problem is though that oscillator is getting pretty stretched. It's not. We got maybe the remainder of this week. You can see we got a little bit of spacing here. At least we cleared that falling the oscillator resistance. You see, where we're breaking out now, the oscillator breakout. And we've seen the similar pattern on the 65-minute chart. We talked about that oscillator breakout on the 65-minute chart. So looking at that oscillator, it looks like possibly a remainder of this week. Again, as long as no shenanigans here, 138.2% extension here. As long as there's no shenanigan, it looks like there's a little bit of room here. And then just because it hits the top, that does not mean like that's the top. I mean, market can, you know what I mean, grind for days. It could stay, it could hit the, like here's a good example right here. Like it can hit the overbought, but you see how it grinded like higher for how long? 1, 2, 3, 4, 5, 6, 7, 8. That's like almost 2 weeks. You see that? See? It hit overbought, extreme overbought, but that oscillator moves sideways. And you can do that with the daily chart, daily oscillator. It could stay there for a week. So that means, despite the fact that oscillator getting there, that oscillator could still stay at the ceiling and have the price go after 507.90. When I'm gonna come back for you, we'll reassess the situation. Injury evening, go train tomorrow.